Joining me now to discuss, Alan Ratner of Zelman Associates, who just last week downgraded the stock to a neutral rating ahead of earnings. How are you feeling about that call now that we did get this report?
Well, it was a good quarter. In fact, a little bit better than we were expecting. But I think the downgrade last week was less around meaningful downside risk and more just the fact that the stock has had a really strong run year to date, and we felt like it was pricing in some pretty good news, which you saw in this release.
Yeah. Prices coming down slightly year over year. It looks like margins largely even year over year, but new orders jumping 55%. What does that tell us about the company's activity and also the state of the broader housing market?
Yeah, so the order growth was stronger than expected, up over 50% year over year. Now, that was off of a pretty challenging, a pretty easy comp from a year ago. I think what I'm looking forward to hearing on the call is what their pricing strategy was to achieve those orders, because the gross margin guidance for the remainder of the year does imply a little bit of modest compression from first quarter levels. So the question is, do they have to increase incentives to achieve these orders? Are they seeing their costs going up? I think that's the main topic I'm looking forward to on the call.
So if you're neutral in KB Home, what would you be buying right now, especially since more broadly we've seen the home builder stocks just rip in recent months?
Yeah, the group has had a great run. I think there are some tactical opportunities. Meritage Homes is another mid-cap builder that has underperformed year to date. They came under some pressure following their fourth quarter earnings. We think that represented a buying opportunity. It's a well-run company that's taken a lot of market share, and we think longer term they're going to continue to take share. So Meritage is one of our outperforms. We also like Lennar and Toll Brothers among some of the other larger cap names.
So on a day where we had comments from Fed Chair Powell, which really sort of suggest that maybe the Fed believes we're on track, at least as of right now, for a soft landing scenario to materialize here. And when you have commentary from KB Home about market conditions having improved, how does it speak to the resilience of the consumer and the resilience of this market in the face of what have been higher rates and seem to be higher rates for longer here?
Yeah, I mean, I think it's really just a function of how strong the economy's been. We've got strong job growth. We've got good wage growth. So while affordability is still challenged from an absolute standpoint, you still do have enough buyers out there to drive some modest growth, at least in the new home market. Now, the resale market, on the other hand, has been under pressure, at least from a transaction standpoint. So we're still sitting at a pretty depressed level of overall volume. And at least on the new home side, those sales are coming with some pretty aggressive rate buy downs and incentives. So it's not all rosy, but it's certainly a much stronger market than I think we and everybody else would have expected when rates did begin to climb higher.